Look, imagine you are 27 years old. You finally have a decent job. You have saved up maybe $18,000, and everywhere you look, someone is telling you something completely different about what to do with your money. One person says, bro, buy a house. Real estate is how people actually get rich. Then someone else says, are you kidding? Just dump everything into index funds and chill. Meanwhile, your rent just went up 14%. Mortgage rates look terrifying. And the stock market somehow crashes every time you finally feel confident enough to invest. So now you are sitting there thinking, cool, awesome. I literally have no idea which one is actually better. And honestly, that confusion makes perfect sense. Because people talk about real estate and stocks like they are religions instead of financial tools. Look, here is the thing. Most people do not actually understand why they prefer one over the other. A lot of the time it is emotional. Real estate feels safer because you can physically see it. Stocks feel smarter because they are passive and easy. But if your goal is actually building wealth, not just sounding smart at dinner, we need to break this down differently because the answer is way more nuanced than real estate, good or stocks bad. And there is one massive psychological trap almost everybody falls into. We will get to that in a second. But first, my name is Jacob, and I spend way too much time thinking about building wealth and making smart financial decisions. If you are someone who feels stuck trying to figure out the best way to grow your money without making a huge mistake. All right, let us start with real estate. Real estate is the best investment because people always need somewhere to live. And honestly, that is not a bad argument. Historically, home prices have gone up about 4% per year over the long term. Meanwhile, the stock market has returned around 10% per year before inflation. So at first glance, stocks look like the winner. But raw returns are not the whole story. Real estate has something stocks do not leverage. When you buy stocks, you use your own money. If you have $20,000, you invest $20,000. But with real estate, banks can lend you hundreds of thousands. For example, if you buy a $400,000 house with 20% down, you only invest $80,000 of your own money. Now, if that house goes up 5%, you make $20,000. On $80,000 invested, that is a 25% return. That is why people love real estate. But leverage also works in reverse. If the property drops 5%, you lose $20,000. And real estate also has hidden costs: taxes, maintenance, insurance, repairs, vacancies, HOA fees. Now compare that to stocks. You buy an index fund like the S&P 500. You own tiny pieces of hundreds of companies: Apple, Microsoft, Amazon, Google. No tenants, no repairs, no calls at midnight, just long-term investing. And historically, it has worked extremely well. If you invested $500 per month starting at age 25, at a 10% return, you could end up with about $2.6 million by retirement, and you only contributed around $240,000. The rest comes from compounding. But compounding feels slow at the beginning, almost pointless. You invest 500. You see almost nothing at first. Meanwhile, someone else posts about buying rental properties, and emotionally that feels frustrating because humans are wired to prefer visible progress. That is why real estate feels more exciting. You can see it, touch it, show it. Stocks are invisible. Now about cash flow, people say real estate pays you every month, and that can be true. But after mortgage payments, taxes, insurance, and repairs, the profit is often much smaller than expected, especially with high interest rates today. Sometimes it is only a few $100s per month. Meanwhile, stocks require no management at all. So the real question becomes, what kind of life do you want? Because this is not just a math decision, it is a personality decision. Some people love real estate. They enjoy managing properties and negotiating deals. Others hate that stress, and forcing yourself into real estate because it sounds good online is a mistake, because real estate is not passive in the beginning. At all, stocks, on the other hand, are simple and boring, which makes people underestimate them. But boring is often exactly what builds wealth. Most people who build real wealth do not do anything flashy. They just invest consistently for decades. No secrets, no hacks, just consistency. Now here is something important. Your primary home is not always a perfect investment. Yes, it can give stability and appreciation, but it also costs money constantly. Interest, taxes, repairs, maintenance. So it is partly investment and partly lifestyle. Not the same thing. The best strategy is usually not choosing one, It is knowing when each makes sense. If you are early in your career and moving around stocks usually make more sense. If you have stable income and want to learn real estate, property can work very well, but only if the numbers make sense, because real estate takes time. Decades, not months, and most people underestimate that. They want fast financial freedom, but wealth takes patience. The biggest mistake people make is switching strategies too often. Crypto one year, real estate the next, trading the next. They chase excitement instead of systems. Wealth building is usually boring while it is happening. Now let me tell you a quick story. One person I know bought multiple rental properties. He did okay financially, but he was constantly stressed. Tenants, repairs, vacancies. Another friend just invested automatically into index funds every month. No stress, no management, and eventually built a seven-figure portfolio. Same destination, different journeys. That is why returns alone do not tell the full story. The best strategy is the one you can actually stick with, because consistency beats everything. So what should you do? First, build an emergency fund. Second, start investing consistently in index funds. Third, do not buy real estate just because you feel behind. And fourth, understand that wealth is not about being smart. It is about avoiding big mistakes long enough for compounding to work. Most people who build wealth simply stay consistent and do not panic. So real estate or stocks, both can work, but neither fixes bad financial habits and neither guarantees success. What matters most is consistency, patience, and discipline. Because financial success is not about finding the perfect investment, it is about not sabotaging yourself. If someone gives you $10,000, where do you invest stocks or real estate? Comment down below and make sure to like and subscribe.